Hello and good morning to Madam Hafizah binti Muhammad Yusuf. Today our team from RBA 2422 we want to present about company analysis between ANNJOO Resources Berhad and Southern Steel Berhad. But first of all, I would like to introduce you our team members, which is Ain Syahirah, ZAINOOR IKMAL, NADHILAH, AMIR ZAKWAN, ARIF, and me. So without wasting any time, let's go to background ANNJOO Resources Berhad. Let's go. ANNJOO Steel Berhad was founded in 1961 and known as Malayawata Steel Berhad. It is a pioneer of the nation's steel industry. AJSB is a Malaysian company that is a leading manufacturer of long products such as billets, high-yield deformed bars, mild steel round bars, and wire rods. AJSB operate and upgrade 100 metric tons steel making plant with an annual rate capacity of 820,000 metric tons. ANNJOO Steel Berhad, an investment holding company, has been listed on Bursa Malaysia Securities Berhad main market since November 26, 1996. The primary business of the group is the production and distribution of steel and steel-related products. The group of AJSB focuses on the production of steel products ranging from billets to bars to wire rods for the construction and engineering sectors. The trading divisions handle a diverse product portfolio of flat and long steel for supply to a wide range of economic sectors such as oil and gas, petrochemical, palm oil, and oleochemical. ANNJOO also specializes in slitting and shearing steel coils into plates and sheets of various shapes, size, and dimensions, which supports and complements the steel trading business.
Thank you, Zahin. Assalamualaikum warahmatullahi wabarakatuh to Madam and all my friends. My name is Nadhilah and I will present about the background of Southern Steel Berhad. Southern Steel Group has grown from a small galvanized iron sheet plants to a major steel manufacturers company or group. Southern Steel Berhad is a Malaysian steel company that manufactures, sells, and trades steel products. Some of the product that Southern Steel Berhad sells is steel bars, PC wires, tires, bead wires, and more. Southern Steel Group also involved in rental properties and provision of management service for the supply of labor. This company was founded in 1963 and based in Kuala Lumpur, Malaysia. Southern Steel is listed in Bursa Malaysia under the main market. On top of that, they have 15 years of experience and expertise in steel products manufacturing. More than that, Southern Steel Group has pushed for technological advancement, collaborating with suppliers to commercialize innovative equipment and processes. The most recent example for this is hot roll coil. The group is well known for its innovation to quality, and one of its notable achievements is becoming the first steel mill groups in Malaysia to be awarded the ISO 9002, meaning it's met the Malaysian Serum criteria and international quality standard. Its strong shareholders lineups include Hong Leong Manufacturing Group Sdn Berhad and Signaling Sdn Berhad. The founding families of the group business spanning from rubber product manufacturing, branded retailing, financial services to property development. That's all from me. I will pass to the next presenter.
Next, I am going to present ANNJOO Resources BERHAD Strength Analysis, which is the ratios analysis and summary for year 2021 and 2020. The first one is liquidity ratio. Liquidity ratio includes current ratio, quick ratio, and net working capital. The first one is current ratio. The current ratio is measured using two regular ratios that a company lists on the company's balance sheet in its quarterly and annual financial results, which are current assets and current liabilities. The current ratio in 2020 is 1.14 times, while the current ratio in 2021 is 1.33 times. This gave a good result since the current ratio in 2021 is higher than the current ratio in 2020. This is because in the year 2021, the company has higher liquidity relative to the year 2020 for current ratios. This means that the company has more capability to pay for short-term obligations on time. Next is the quick ratio. The quick ratio is an indication of the short-term liquidity position of a company and tests the willingness of the company with its most liquid assets to fulfill its short-term obligations, since it demonstrates the willingness of the company to use its near cash assets, which is assets that can be easily converted to cash, immediately to pay down its current liabilities. It is also referred to as the acid test ratio. The formula used to calculate quick ratios is current assets minus inventory and prepaid expenses, divide with current liabilities. As for 2020, the quick ratio is 0.45 times, while in 2021, the quick ratio is 0.49, making 2021 0.04 higher than 2020. This is good because in the year of 2021, the company has higher liquidity relative to the year 2020 for quick ratios. After minus inventories and prepaid expenses, the company is able to meet its short obligation. Next is the net working capital. Working capital is a measure of its liquidity, organizational effectiveness, and short-term financial health of a company. If a business has significant positive working capital, then it should have the opportunity to invest and expand. If the current assets of a corporation do not meet their current liabilities, it can have trouble rising or repaying creditors or even go bankrupt. The formula used to calculate net working capital is current assets minus current liabilities. The net working capital in year 2020 is RM 150,590, while the net working capital in year 2021 is RM 262,801, higher than 2020. This gave a good result since in 2021, the company has higher liquidity relative to the year 2020 for year working capital. This means that the company has sufficient margin of safety due to more current assets than the current liabilities. Next, leverage ratio. Leverage ratio includes debt ratio, debt to equity ratio, and times interest earned. The first one is debt ratio. Debt ratio measures the percentage of total assets that are financed by debts. This indicates the amount of debt in the company financial structure. The higher the debt ratio, the higher the company risk. The formula to calculate debt ratio is total liabilities divided with total assets and times 100. In 2020, the debt ratio is 50.5%, while in 2021, the debt ratio is 49.8%, which is lower than the debt ratio in 2020. This gave a good result since for the debt ratio, the company performance is better in 2021 because less of its assets are financed through debt and involve high risk as compared to year before. Next is the debt to equity ratio. Debt to equity ratio is quite similar to debt ratio. This measures the amount of debt being utilized relative to the capital provided by the company's owners. The higher the debt to equity ratio, the higher the company risk. In 2020, the debt to equity ratio is 6 times, while it lowered down to 5 times in 2021. This gave a good result as for debt to equity ratio, less amount of firm's capital is from borrowing, showing the company are doing better in 2021 than 2020. The last one is times interest earned. This measures the company's ability to pay or serve its financial interest expenses applied on the debt used. The higher the time interest earned, the better, as it indicates higher company's ability to pay interest. The times interest earned in 2020 is 1.9 times, and it increased to 8.81 times in 2021. This gave a good result since the company has high ability to pay for interest payment and has more profit margin than previous year of 2020. The next person is going to present about activity, profitability, and market ratio.
For activity ratio, The first one, average collection period. The company is poor in terms of average collection period. Why? Because it was not able to collect its account receivable in a shorter time. The second one, inventory turnover. The company is bad in terms of managing its inventories to generate sales. In 2021, it generated 1.88 times, while in 2020, it generates 2.50 times. Third one, fixed asset turnover. The firm is efficient to generate high sales with small amounts of investment on fixed asset in 2021 compared to 2020. The last one, total asset turnover. For total asset turnover, the company is more efficient in managing its total assets to generate sales compared to 2020. In 2020, it generated 0.85 times, while in 2021, it generated 0.91 times, increase in the year 2021. Next one, profitability ratio. The first one, gross profit margin. The company gets higher profit in 2021 after deducting direct costs for gross profit margin compared to 2020. Second one, operating profit margin. In year 2021, the company is generating higher profit after deducting direct and indirect costs compared to previous years. The third one, net profit margin. In the year 2021, the company is generating higher profit after deducting all costs as compared to the year 2020 due to higher earning after tax. Fourth one, return on asset. Return of assets of the firm in 2021 able to generate high profit from its investment in total assets and are better than previous years. Last one, return on equity. Return on equity is higher than last year's performance. This means the company is able to pay more profit to its shareholder from their investment. In 2020, it generated negative 9.04%, while in 2021, it's getting higher to 18.36%. Next, the only one, earning per share. The company has more profits that can offer to investors for each shares invest. For each invest by investors, it can generate 39 cents profit for each one share. That's it from me. Let's go to the next presenter.
NURUL'AIN SYAMIRA, and today I will be presenting on the ANNJOO Resources BERHAD and Southern Steel Comparative Analysis for the year 2021. First, we have the liquidity ratio, which are then divided into three: the current ratio, quick ratio, and the net working capital. Let's look at them one by one. The current ratio for ANNJOO Resources BERHAD is 1.33 times. Meanwhile, it is 1.01 times for Southern Steel. From this, we can tell that ANNJOO has lower liquidity relative to Southern Steel for current ratios. This could also mean that the company has higher capability to pay for short-term obligation on times. Next, after we minus all the inventories and prepaid expenses, the company was unfortunately not able to meet its short obligation. Also, the quick ratio for ANNJOO Resources was 0.49 times, and it is 0.54 times for Southern Steel. Therefore, ANNJOO has lower liquidity relative to Southern Steel for quick ratios. As for the net working capital, it shows that ANNJOO Resources has 413,319 ringgit. Meanwhile, Southern Steel has only 14,289 ringgit. In the year 2021, the company has higher liquidity relative to the year 2020 for net working capital. This means that the company has sufficient margin of safety due to more current asset than the current liabilities. NURUL'AIN see the comparative leverage ratio for both company. ANNJOO Resources has 49.8% and the Southern Steel has 68.9% in total on the debt ratio. This shows that the ANNJOO performance is better than the Southern Steel because less of its assets are financed through debt and involve high risk as compared to the year before. For the debt to equity ratio, ANNJOO has 5 times, but it is 59 times for Southern Steel. The less amount of ANNJOO capital are from borrowing, and at the same time, Southern Steel is showing that the company is doing much better. Last but not least, we have the times interest earned. ANNJOO times interest earned is 8.81 times, and it is 9.29 times for the Southern Steel. It means that the company has lower ability to pay for interest payment and has lower profit margin compared to the Southern Steel. That is it for the liquidity ratio and leverage ratio. So now let's move on to the next part, which will be presented by Syahirah.
Hello and Assalamualaikum warahmatullahi wabarakatuh. So today I will continue with the comparative analysis. So me, Syahirah bin Shariff, gonna talk about activity ratio, profitability ratio and market ratio. So as you can see on the table, it is divided into few parts of activity ratio. This is average collection period, inventory turnover, fixed asset turnover and total asset turnover. Average collection period, we can see that ANNJOO Resources BERHAD is 0.22 days, and meanwhile Southern Steel BERHAD is 0.03 days, and this means that ANNJOO is poor in terms of average collection period because it was not able to collect its account receivable in a shorter time compared to Southern Steel. For the inventory turnover, we can see that Southern Steel generate higher, which is 2.77 times, and it is more than ANNJOO, which is it generate 1.88 times. So this means that ANNJOO is bad in terms of managing its inventories to generate sales due to lower inventory turnover compared to Southern Steel. Okay, now let's move on to fixed asset turnover. So as you can see on the table, ANNJOO record higher than Southern Steel BERHAD, which is 2.46 times, and Southern Steel BERHAD recorded 1.51 times, and this means that ANNJOO is efficient to generate high sales with small amounts of investment on fixed assets rather than Southern Steel BERHAD. Okay, last but not least, we can see here that for total asset turnover, ANNJOO is more efficient in managing its total assets to generate sales compared to Southern Steel. This is because we can see that ANNJOO recorded 0.91 times compared to Southern Steel BERHAD, which record 0.74 times. Okay, now let's move on to profitability ratio. Okay, for profitability ratio, it can be divided into 5 parts, which is gross profit margin, operating profit margin, net profit margin, return on asset and return on equity. Just like on the table mentioned above, ANNJOO definitely gets higher profit after deducting direct costs for gross profit margin compared to Southern Steel BERHAD, Okay, so we can see here that ANNJOO recorded 17.74%, and meanwhile Sultan Steel Berhad only recorded with only 10.55%. Okay, just like how ANNJOO recorded higher than Sultan Steel Berhad in gross profit margin, they definitely also recorded higher for operating profit margin, net profit margin, and return on asset. So this means that ANNJOO definitely generate higher profit after deducting all costs, including direct and indirect costs. Furthermore, it is undeniable the fact that return on equity for ANNJOO Resources is higher than the Sultan Steel Berhad performance, and this also means that the company is able to pay more profit shareholder from the investment. Okay, now let's move on to the market ratio. As you can see on the table above, market ratio only consists of earning per share, which is ANNJOO recorded 0.39 ringgit in earning per share. So as overall for the summary, ANNJOO Resources Berhad performance is better in liquidity ratio, leverage ratio, activity ratio, and profitability ratio compared to the Sultan Steel Berhad. But in some cases, like time interest earned and inventory turnover, Sultan Steel is definitely better due to high ability in times interest earned and higher inventory turnover. So that's all for me, and now let's move on to the next presenter.
So hi, Assalamualaikum warahmatullahi wabarakatuh. As you guys know, I'm AMIR, and I would like to say thank you for our previous presenter for presenting of our assignments. So right now I'm going to continue with our conclusion and recommendation for our assignment. So basically our assignment consists of two trend analysis, which is the first one is ANNJOO Resources Berhad trend analysis for the year 2021 and 2022. Secondly, we have ANNJOO Resources Berhad versus Sultan Steel, and we're using a comparative analysis to analyze the company. Alright, so first of all, I would like to conclude the trend analysis first. So as a conclusion was read from study ANNJOO Resources Berhad financial statement. By seeing an increase in profit over the previous year, we may say that the company is succeeding in its mission. Alright, the profitability ratio shows that the business is truly doing well in terms of rising profit. Okay, after subtracting the direct expenditure for GPM, the company earnings are higher in 2021 than it was in 2020. Based on our analysis, due to higher profit in 2021 compared to 2020, the corporation will also generate a higher profit after subtracting direct and indirect expenditure. Okay, the company return on asset in 2021 will be higher than it was in the previous year and will be able to cover its investment in total asset. Okay. Additionally, this year's performance has a greater return on equity than last year. As a result, the business may return more of investment profit to its shareholders, and financially the company rating has improved a little bit better over time to time. Alright, and it appears that the business will grow and expand. Okay, for the recommendation that we would like to give for this company is that we have some ideas for the business that we want to put forward. Right, the company must first do a better job of collecting its account receivable in a shorter time, so that it can recoup the money back from its credit sales. So we increase their credit, or we can call it as their cash reserve lah. Secondly, in order to better manage their stocks and increase their inventory turnover, the company must also enhance their management system, because they will be enable them to increase their sales by managing their inventory system well, so that we increase their sales lah. You can say it like that. Okay, after that we will move to our comparative analysis, which is ANNJOO Resources Berhad and Sultan Steel. So we can see the comparison of these two businesses leads us to the conclusion that ANNJOO Resources Berhad perform better than Sultan Steel in terms of liquidity ratio, leverage ratio, activity ratio, and also lastly is profitability ratio. Alright, but however, in some areas such as time interest earned and inventory turnover, Southern Steel performed better due to its superior capability in this area. In terms of profit, ANNJOO outperforms Southern Steel if direct costs for GPM are subtracted. Additionally, compared to Southern Steel, ANNJOO also makes a bigger profit once a direct and indirect costs are subtracted. Okay, last but not least, ANNJOO Resources Berhad is making more money overall than Southern Steel because of its great earning after tax. Okay, continue. Apart from that, we can observe that Southern Steel wasn't doing too poorly because there are several ratios such as time interest earned, inventory turnover, and they are higher than ANNJOO Resources Berhad. Compared to Southern Steel, ANNJOO Resources Berhad has a lesser ability to pay their interest and a lower profit margin per unit of interest earned. Additionally, because ANNJOO has a lower inventory turnover than Southern Steel, it's performed poorly when managing its inventories to produce sales. Alright, because it's completely dominates Southern Steel in terms of several ratio, there isn't much for me or for us to suggest for ANNJOO Resources Berhad. However, there are other ratios that it can raise, such as time interest and inventory turnover, to have a higher success in their upcoming year and to keep their company profit in a good terms. Alright. So for Southern Steel recommendation is that Southern Steel can make numerous ratio related improvement in order to raise their profit and to lower their debt and also boost their equity. If the company can raise its return on equity, they will be able to draw in many more investors, increasing their net value. I'm sorry about that. So as we can see from this trend analysis and comparative analysis, which one would you like to prefer? Alright, so give us a comment and like the video. Thank you.